podcast where we put you on the map. This is Ron Costa in a New York state of mind here today, and we're going to be talking about crowdfunding. Listen, let me ask you guys a question. Should every crowdfunding campaign be a success? We're going to talk about that today. So before we do that, let's introduce Vicki Hutchmala from the World Token Market. Vicki, how are you today?
Well, as always, Ron, I'm outstanding in a fabulous place. I went walking today. The skies were blue. The temperature was perfect. And I'm ready for our podcast today. We have a very exciting guest, and we're going to talk about one of our favorite subjects, crowdfunding, how to do it right, how to be successful, and let's get started.
Absolutely. Let's introduce a real industry professional here, guy who knows the ins and outs of crowdfunding. Everyone, let's meet Irwin Stein. Irwin, how are you doing today?
I'm doing well, Ron. I'm also out in the beautiful sunshine.
Excellent.
It's about time, frankly.
Yeah, well, life is good in California, I guess. So all in all, that's still a very populous state. People must be there for a reason, right?
Absolutely.
So listen, before we get into this whole crowdfunding podcast, let's get a little background on you and what you've been doing and how you got to this point.
I kind of fell into finance back in the 1970s when I came out of law school. I worked on Wall Street for a number of years. And I was young and a sponge. And I learned a lot. I worked with a lot of very high-end people. And when I opened my own practice, I was fortunate to have good clients who raised money and solved problems. And it's carried forward over the years. I've met a lot of good people. I've read a lot of good articles and written one or two. And it's kind of raising money is kind of second nature to me at this point.
Right.
That's
And
a good thing to do.
Yeah, as you mentioned, you've written a lot of articles about crowdfunding, and I'm sure you've got some interesting feedback from people on some of the topics that you've been written about, right?
It's interesting. The first articles I wrote were very negative. I called out 6 of the first Reg A deals back in 2016, and I said they were scams. And within a year, 5 of the 6 had problems with regulators. It's really not that hard to spot a scam if you know what you're doing.
Yeah, with Reg A being so new.
It's not as easy as you think.
Excuse me?
I said, a lot of times something might seem easy, but it's really not. If you don't know what you're doing and you don't have the right advice and you don't have a good team behind you, no matter what you do is not going to be successful. And that's very important in crowdfunding. What would you say, Irwin, are the most important things a company needs to consider if they're thinking about going a crowdfunding route?
The truth of that, Vicki, is if you're in business and you know your business and you want to raise money, hire people who do that well.
Absolutely.
I look at myself, I'm a plumber. I help companies put the plumbing together for a crowdfunded offering. And that's really all it is. You need to offer an investor a good investment. And that sounds simplistic, but if you go around to the various crowdfunding platforms and portals, there are really a lot of companies that are more wishful thinking than good businesses. And once you've done that, once you've got an investment that's likely to attract investors, then you need marketing experience. I mean, the big lie in crowdfunding is that you don't need to hire a marketing company, that you can do it from your social media contacts, and that's very rare, very rarely successful. And there are portals that claim, well, look, we've had hundreds of thousands of investors here, but the recidivism rate is really negligible. People come to a crowdfunding portal, especially the Reg CF portals, and they're driven there to buy one investment, and they rarely come back. So if you're going to look for investors, then you've got to have a marketing company that knows what it's doing, and it'll bring investors eyeballs to your site. And that's really all it is.
We've found that out, Ron and I, over different podcasts and talking to various people in the industry, that a key to success in a crowdfunding raise is having a marketing plan that starts well before you start the crowdfund. Because if people don't know about you and they don't know what you're doing, they're not going to invest in you as soon as you start the raise, because they don't know about you. You have to start that well ahead, and you have to be really comprehensive in your marketing plan, and you can't do that unless you have a good professional team to help you, as well as the financial people that help you put together the crowdfunding, the whole raise. You need professional expertise to help you if you want to be successful, no matter how much you know or don't know about it.
I couldn't agree more. Absolutely correct. And I've done a few from cold starts, and it's easier on the Reg D side of the industry. If you're raising money to syndicate real estate, it isn't that hard. The mainstream stock brokerage industry has probably put a real estate investment in front of virtually every accredited investor in America. And they sell them as passive income, and it's not difficult for any investor to understand an apartment building or an office building and how it functions. When you get to, when you get to the other side of it, the more technical companies, the new products, etc., yes, you've definitely got to introduce that to the marketplace before you start raising money.
Right. You know, everything has to have a solid foundation. Whatever it is you're doing, the stronger the foundation, the better the outcome. And that's true with crowdfunding too, I believe, because if you have created your foundation before you do your launch, then the whole process goes much easier, much quicker, and is relatively less expensive because you have all your ducks in a row before you start, and everything just kind of falls into place. And that includes the marketing to the investors to invest the money once the launch happens.
That's absolutely correct. One of the interesting things that I've learned about marketing, and I'll tell you up front, a dear friend of mine who does marketing will always make me disclaim that you should never take marketing advice from a lawyer. That's probably the kiss of death. So I'm not going to offer anything substantive. But what's become obvious is that if you do have an offering that's attractive to investors, if you send out 500,000 emails and you only get half the money you want, then you send out another 500,000 emails. It's very much a numbers game. And I think in the real world, more money is wasted on videos that go with these offerings as opposed to bringing more eyeballs to the presentation in the first place.
Right, right. And I think the presentation has to have substantive information as well. I think you nailed it before when you talked about social media platforms like Facebook or Twitter, and people are trying to do it themselves, and they think, you know what, I'm going to post something on my Facebook page, and thousands of people are going to see this, and I'm going to convert all these people coming to my page, and it just isn't like that. And Facebook in particular, I'm not sure if there's a lot of accredited investors that make investment purchasing decisions based on a post on a group page. I don't know. I mean, what do you think?
Accredited investors, no. I mean,
Right.
It's possible, but again, you need to target the audience. And again, this is marketing advice, but you need to target your audience, and you need to, if you think you need to send out, like I say, 500,000 emails, then you better budget for twice that many.
Yep.
I think the biggest reason that crowdfunding fails is that the issuers aren't prepared to pony up a little more money. There's a myth out there that you can bootstrap everything, and
Yep.
while it's possible, but it's not professional.
Yeah, it reminds me of something that you wrote. I'm reading this right from your email here. You said an intelligently planned, well-funded, and professionally executed crowdfunding campaign should be successful in raising the desired funds every time. And that's an interesting statement for two reasons. One, well-funded is obvious, and professionally, intelligently planned is something that you don't see too often.
Well, that's not the first time I've said that, and the every time has gotten a lot of negative feedback. I don't do the marketing side of it. I do the paperwork. I do the structuring. I work with the client, and I've seen clients work with marketing companies that do not have a clue. I mean, what does an investor want? Should be the first question. And the answer is always the same. The investor wants a return on the investment.
Absolutely.
So, but marketing companies sell marketing. They don't necessarily, I wouldn't imagine that a company that markets crowdfunding real estate would be the company I would pick to do a pharmaceutical company, to sell pharmaceuticals or sell toys or whatever.
Exactly.
You really have to specialize in what you do. I don't do immigration law. I don't do matrimonial law. I do securities law. And it really, I can't stress enough how I've sat by and watched people who have absolutely no idea about finance. If there is anything wrong with the crowdfunding industry, it's that there are an enormous number of people who print up a business card that says crowdfunding expert who have no idea.
Right.
Yeah. And that's true with a lot of industries. Just because you did one thing one time doesn't mean you can do all things every time. You have to have an expertise and fine-tune that expertise, but that doesn't mean, as you said, a divorce attorney doesn't know anything about real estate or personal injury, and so you go to that expert because that's what you're looking for. And the same with crowdfunding. You need real experts who have experience, and that's why it's very important to do due diligence so that you know what team to put together, the right people to consult you on the right thing that's going to make your crowdfunding launch successful, even though it's completely different from your next door neighbor who did the same thing and it was great. Doesn't mean yours is going to be great if you follow the same steps. I'm very, very I think it's very important that people strategize whatever they do, no matter what it is, crowdfunding or otherwise. You have to strategize. You have to start with a good foundation, and you have to strategize and anticipate what things might come up and know what to do if they do. And you can't do that if you don't have expert professional consultants helping you along the way. I personally believe that's vital to being successful in your crowdfunding launch.
Vicki, it's actually worse than that. There are roughly 60 of these crowdfunding portals, which are the Reg CFs, the small deals that they just raised to $5 million. FINRA, which regulates these, has expelled 2 portals.
Why is that?
5 people in the crowdfunding industry can name the 2. And both of them were expelled for, among other things, valuations that were ridiculous. If I want to find a ridiculous valuation, I just have to sit here, because the phone will ring and somebody will call me and tell me they want to raise money, and their company, which has, virtually no sales, never made a profit, okay, is valued at $10 million. In what universe?
Yeah.
Okay, people, I swear to you, the crowdfunding industry thinks Ben Graham invented a cracker.
Right. Well, it gets back to what you were talking about earlier in the podcast when you saw those first Reg A deals come out, and the valuation on those deals are just off the charts crazy. And it's no wonder why those original ones, even the ones that were considered, quote, a success, really didn't do well. And, again, it all gets the crux of the problem is the valuation almost all time, every single time.
Well, there's the valuation, and then one of those platforms was expelled for what FINRA calls impractical business plans.
Yeah.
Now that's a skill, okay? And you really got to read a lot of business plans, but if you've got 4 technical people running a company, which of them knows how to run a company? Which of them, you really want to see a company go down? I've had experience with a founder who had about 40 employees. I said to him, do you have a human resources person who does the hiring and firing? He does. I said, do you know the rules about hiring, about interviewing senior citizens or disabled people? He said to me, there are rules?
Yeah.
It's not that simple. I swear, it really is. Raising money is simple. Okay, running a company is hard.
That's right. And just because you can create a product, or just because you know how to build a widget, does not automatically mean that you know how to run a company. And if you don't have somebody with you or somebody helping you that knows how to do the day-to-day operational aspects of a company, well, as you said, it's not going to work. You can't do it all. People just, they can't do it all. Irwin, maybe what the crowdfunding industry, maybe what it needs is a source for information, a source for quality, quantified information that changes and evolves as the industry. Ron and I do our podcasts because we want to inform our listeners on different topics, different subjects, and better ways of doing whatever it is we're talking about. A lot of people become stagnant, I think, in their knowledge and their information. Well, this worked. I know how to do this, and so now for the rest of my life I'm going to do it the same. But things change. Rules change, information changes, and if you don't keep up with it, then, that puts a dent in whatever you're doing too, because you're not up with the trends and you're not up with the evolution of the industry that you're working in.
There is a crowdfunding professionals association that should have been doing this for years now. I Skyped into a conference they had in 2015 or 2015. They interviewed me. I answered the questions, and it was fine. And I've offered them. I have a library of articles, booklets on how to do it right. I'm writing a guide, a compliance guide for the portal industry. I mean, talk about stupid. I really feel there are 60 potential buyers of this booklet. Okay, yeah. I should have done an NFT. I mean, if I'm lucky, I'll come back with enough to cover 5 minutes of my time. But the reality is, and I've spoken to these people at the Crowdfunding Association, and the reality is, if you ask the question, well, how many dollars have you helped to raise? It's infinitesimal. These people don't speak with investors. They don't know investors. I've represented thousands of investors, okay, individuals, accredited institutions. And I've gone through, I came to California originally to work for a venture capital fund back in the 80s when Silicon Valley still had trees.
Yeah.
Okay, but in those days, you had to have an MBA to work at a venture capital firm. You had to have experience. You had to crunch the numbers. And that's, there are so many people in crowdfunding who show up with what I call a VC pitch deck. When VCs are going, in a good year, they fund less than 2,000 companies. And they're not looking for small businesses, really. They're looking for something they can grow. I mean, you give me $5 million, $10 million, I'll give you a profitable business. I'll hire the right people. But it's all about, a lot of people get their head filled with ideas that really are inappropriate. I do a lot of revenue sharing deals for small companies where I can fund an advertising program, or they can fund merchandise to, one cargo. Okay, if you fund one cargo at wholesale and sell it out and split the profits with the investors, it's off your cap table. It's not on your balance sheet anywhere. It's just that you've spent money on advertising, you've got more sales, and you've got money left over to move forward. And that makes more sense for a lot of small businesses than not. I mean, I'm all in favor of a small business. You want to fund an ice cream shop in the neighborhood? That makes sense to me. Okay, that's a very simple thing to do. You can do that on social media because it's location centric. But if you've got a product that you want to go national with, you better have somebody who's marketed a similar product before.
Right. Yeah. And Irwin, you mentioned before how these days, if you just create a business card, put the word expert on it, and all of a sudden you're an expert crowdfunder. But these portals, getting back to the valuation of this, when a company is overvaluated, or the valuation of the company is so skewed, so wrong, whose fault is that? Is it the vetted? Because these portals vet the deals, I'm sure. Is it the portal's fault for putting that up? Is it the CEO's fault for thinking that it's worth that much, or is it both? Or
there are portals that absolutely encourage small businesses to increase their valuations to ridiculous levels for absolutely no reason. I don't know who they think they're kidding. Okay, it's good for the ego of the founder. The portals are so busy competing for businesses to fund that they fail to look at these investments from the investor's point of view.
Yes.
And that's what the regulators do. That's what I learned in dealing with FINRA and the SEC for all these years on behalf of clients. Okay, you really have to, what FINRA is concerned about is what are you telling investors? And like I say, they expelled 2 portals over valuation issues.
Yeah.
But if I picked up the phone and called 10 portal owners, operators, and said, are you aware of this? They would tell me they never heard of it. Because there is no industry group, as there is with stockbrokers and investment advisors and, such, who are concerned about staying within the regulator's white lines. If I do anything for a client that's raising money, I try to keep them right squarely out of the, between the regulator's white lines, out of the purview of what anybody's going to think is a problem.
Right.
Yes. We've done a couple of podcasts on these portals, and a lot of companies now we've seen are trying to go the private label route, the white label, where they put a investment portal on their own website, so they're driving traffic to their site rather than a portal site. But in that situation, is the SEC expelling any of those people, or are they looking at the valuation on the private label offerings as well?
You have to differentiate between the portals, which are FINRA members, on the Reg CF side, the small offerings, where you're talking about $100, $250 from small investors. And now that you can add accredited to those offerings will get better. As regards the invest buttons, which are really Reg D offerings, some of them are good, some of them are not good. The very first action that the SEC brought in crowdfunding back in 2015 was an oil and gas company that put itself on 4 platforms, and claiming that it was going to drill on leases that it didn't own. And a modicum of due diligence would have shown that. And again, the problem is, yes, if you're putting an invest button on your own website, then nobody's doing due diligence. Not that the industry understands it, but at least you've got somebody to sue if somebody runs away with your money.
Well, right, exactly. That's an important consideration, and you would think, well, I guess that's the investor's responsibility to look at the material and determine whether or not it works for him. And again, that's where the
investors, Ron, I've represented thousands of investors. They can't do it. It's very difficult unless you're trained. I mean, I did my first due diligence trip in July of 70-something to a gas field in Louisiana where the mosquitoes were the size of hummingbirds, and I was young and I only had wool suits. And I was only there to carry the briefcase for the investment bankers. I came home with a Polaroid of myself in front of one of these gas wells, and I showed it to my boss, and he handed it back, and he says, so how much gas is there? And, that's the question you're there to answer. And it's not, they've drilled a lot of oil and gas wells over the years, and people do answer those questions. There's a law firm in Tulsa, I think, that does due diligence in that industry, but they're expensive, and nobody in crowdfunding wants to spend any money. And that's really the difference between going to Merrill Lynch to raise money and going crowdfunding to raise money. And eventually, crowdfunding is either going to clean up its act or wither and die.
Yeah, well, it gets back to what you said earlier about being well-funded. It's the catch-22. if you want a successful crowdfunding campaign, you better be willing to pay some money for marketing and every other thing that comes along. But these companies don't have money, so they think they can do it on a shoestring, and that many times that ends up in failure.
Well, I'm working with a group that set up a platform to help fund companies outside the U.S. and introduce them to U.S. investors. And there's always been more than enough companies around the world looking for U.S. investors. And I've discovered there's an enormous tech center in Uruguay. And they laugh at, they love to get U.S. money, but they can't afford to come here and pay what it costs. And what they've done is they've kind of set up a mutual fund among the various companies, and in a serial fashion, they raise the money here, and of course that money comes back to them when the raise is successful. So they can, reuse it and do serial different companies to get funded. This is a problem that's really easily fixed because, like I say, it should be successful every time. And I appreciate everybody can't go to a rich uncle, but I do have issues with, poor guys who went to Stanford. Who can't seem to come up with 4 credit cards, to fund a good campaign. That's a little perplexing to me.
Yeah.
and everybody thinks they're an expert.
That's really the issue here. There is so much. People call me and say, but so-and-so said. And I say, well, how much money has so-and-so raised?
There you go.
Well, I went to a conference. I spent $1,000 to go to a conference. I said, well, that's good. I said, did he spend $20,000 to get an MBA?
Yeah, Irwin, this conversation reminds me of an old movie with Danny DeVito called Other People's Money. I don't know if you saw it or not, but it was really interesting where this one guy is giving his pitch, and he goes to this great thing, and everybody is looking at him, and they're all applauding, and everybody thinks it's the greatest thing in the world. And then Danny DeVito gets up and says, amen. Amen, because you just heard a prayer, and he gives them the truth, and that's what the crowdfunding world needs right now. They need a lot of data. They need some good organizational and informational sources, and I think that's what you're bringing to the table as well right now.
Well, I think, like I say, I'm negotiating with this company in Chicago that wants to do a weekly newsletter where a group of us who've been around a while are going to kind of evaluate and pick out the better offerings. But the crowdfunding industry has had its head up its ass since the beginning. The first big deal that everybody got together with was Elio Motors, the 3-wheeled car, okay? And I wrote that up as a scam. Their pitch was they were going to get $130 million from a government program. So I called the government, and I got the paperwork on that, and it said right on top, you can get a $100 million loan if you've got the collateral. I mean, it's the government. They don't just give away money, or historically they don't give away money. But, they didn't have any collateral, and they raised $16 million on one of the platforms, and they raised another $40 million in deposits from people. I wrote it up and said this is clearly a scam. And about 4 weeks after I published the article, I get a call from the Louisiana State Attorney General's office. He said to me, "How do you know this?" I said, "Here's the phone number. I called the Department of Energy."
Yeah.
That is the most basic due diligence you can do.
Well, yeah. Although I bet if you call the government, would they have you on hold for 4 hours before you got through?
Or 3 days.
Actually, Ron, what you would find And I found in all the years professionally, many government agencies are very helpful, okay, and very fact-oriented. I mean, you know, if you're a New Yorker like me, but if you go out to the Midwest and you ask the farmers, you know, what's the state agriculture, you know, department done for you? And they have only nice things to say.
Yeah, yeah.
Okay, there are plenty of helpful government agencies.
No question, no question. And you know, these days they want to get things done as well. I know, you know, Vicki, you've done a lot of stuff with the opportunity zones, and all the state agencies and people you've spoken to have been very helpful, right?
Exactly.
Yeah.
And a lot of times, you know, it's how you talk to people and how much information you get back. If you treat people with respect, they do a lot of things for you, whether it's government or whether it's just a mentor or somebody who's done it before. Everybody wants to share their knowledge and information, but it's how you approach it to get the most benefit from it, I think, is a lot of it as well.
I can tell you that I most conversations with strangers, I tend to start with humor. I've told jokes to state attorney generals. I swap jokes now with presidents of banks, not just in the U.S., but globally. My blog has regulators from all over the world who look at my articles and take action, and that, you know, that's rewarding for me. But it's, you know, I write the blog because I really would love to help clean up the marketplace, but that's, you know, that's a fool's errand. It's not going to happen. I've seen a $6 billion scams in the mainstream market where 40, 50, 60 broker dealers sold fantasies to investors, and, you know, until, you know, Madoff kind of stuff. And with respect to Madoff, there were a lot of professionals who, you know, got questioned about Madoff over the years and would wave people off. You know, they didn't write articles like I do, but they would say, nah, something's not right about him. He's got, you know, double-digit returns for all these years. That doesn't make sense. And it didn't make sense. But, you know, a good con artist can sell anything.
Well, I'll tell you what, Irwin, I mean, the people who are listening to this podcast right now, I'm sure they're seeing a definite need for your kind of services and all, and with the blog articles, et cetera. How do people get a hold of you? Or do you have a website? Where can people read your articles? And is there a way to contact you?
The blog is called laweconomicscapital.com. I taught law and economics at a university here. I taught finance and economics there as well. And I'm not hard to find at all. I'm on LinkedIn almost every day. I was supposed to be retired, but I'm having too much fun.
There you go.
Oh, there you go.
Exactly. So, you know, Vicki, what do you think about this podcast? Did we answer the question that everyone wants to know about crowdfunding?
I think we did, and not only that, Ron, I think that we have shown our listeners that if you want to be successful, you have to do it right. You have to do due diligence. You have to build a foundation that's solid, and you have to find the right professional experts to help you along the road. And I believe we had that person on our podcast today, and his name is Irwin Stein. And if you want to be successful in your crowdfunding in all aspects of it, contact Irwin and let him help you.
That's very kind of you, Vicki. I'm going to put you both on the spot because assuming I make this arrangement to do these newsletters, they want me to do some podcasts as a host in the fall, and I'm going to ask both of you to come on it, and I'm going to ask you the hard questions.
Excellent. Looking forward to it. That sounds great. Yes.
Yes,
excellent.
it would. We would look forward to that, Irwin, absolutely.
But hopefully...
I really appreciate the opportunity to come out here. I know you guys have a big audience. And I enjoy conversations with intelligent people. I really do.
Thank you. Thank you for your time.
I think that was a compliment, right,
that.
Ron?
Yeah. I'm going to take it as a compliment. That works for me. It really, really.
What kind of New York? What kind of New Yorker are you, Ron? You don't know a compliment when you hear one.
we New Yorkers are always skeptical, aren't we? Yeah. So, all right. Well, on that note, I think we should close this out. This is a great podcast, really good information. Irwin, thanks a lot for being a guest on the show. We really appreciate you taking the time out to talk to our audience. Really, really enjoyed this one. And Vicki, thanks for co-hosting this. This was a lot of fun. And folks out there, you're listening to the Mappable USA podcast at MappableUSA.com. If you scroll down that homepage, you'll see all our syndication sources. We have a lot of them. Just pick the one that you like best. Subscribe, and you'll never miss another one of our episodes. If you want to be a guest on the show like Irwin was today, there's a guest tab. Fill that out. We'll see what we can do about getting you on the show. And if you like what you heard today, send us an email at info@MappableUSA.com. or just leave a comment on whatever page you're listening to this on right now. So thanks for your support, everyone. Thanks for listening. We'll be at you next time with another Mappable USA podcast. Have a great week, everyone.